Welcome back to the SteadyTrade Podcast, everyone. I'm Tim Bohen, back with Matt McCall. We got a fully loaded schedule, a lot going on this week. Just last weekend had that big Bitcoin conference in Tennessee. A lot of news came out of that. We're also in the heat of earnings season as we're recording. We got some big names announcing tonight. And then we're also, Matt had a great idea. We're going to kind of go over a couple ideas that we've got. We actually both put together a watch list, a report for you. We'll find a way to get that to you. We'll put it in the comments. I don't know how we'll do it. Maybe we'll have you email for it. But we both have a watch list report, and we'll kind of go over that. So that being said, welcome back, Matt. How's it going?
Doing great. Thanks. As you can see, I'll explain my different background every week at this point. Back United States, but traveling again. I'm back on a plane tomorrow morning. So we're getting a little old for a while, but I haven't been in my bed in about 5 weeks, but it's been great. So just to explain the different backgrounds, hopefully we'll be set soon here, Tim. But you brought up the Bitcoin conference, the Bitcoin 2024 conference, the largest one in the States is what they say. And, the big news that came out of it, you saw it, I saw it, most people saw it, is former president, current presidential candidate, Donald Trump spoke there. And was pretty bullish on Bitcoin. And as you know, 5, 6, 7 years ago, he wasn't
a hater.
Yeah, wasn't bullish at all. I listened to the speech. I was impressed, and obviously he's a politician, so he says what people there want to hear. But from what I can see and what I read on X and everything, the people that were there that I've talked to, it was really a good energy around that, Tim, that people were really psyched to see him there and actually see politicians start taking notice of it. And I think this is the first election that we'll ever have where cryptocurrencies and Bitcoin will be a topic, or is a topic, I should say, when it comes to a presidential debate, if he ever does debate Harris. So you watched the whole speech then? I did. Okay, yeah.
I didn't. I just got busy and kind of forgot about it. And then I knew you would, but so that was kind of my first question was, and you kind of touched on it. Do you think he's a believer, or do you think he's just playing politics?
I think there's probably 50-50 involved. Okay. I would say 70-30 is a believer. I'd say he leans towards a believer at this point, but there's obviously some politics in it. Some of the things he said, I'm 100% behind. One thing he said is he wanted Bitcoin to be mined, minted, and made in the U.S. I'm not quite sure what minted and made means. He basically saying that they want to be the leaders in mining.
He's a boomer, man. Cut it to
yeah, exactly. But he wants it to be. He basically wants the U.S. to be the leaders of this new up and coming industry, this up and coming mega trend. And he did say, quote unquote, "I'm thrilled to be the first American president ever to address a Bitcoin event," and that's groundbreaking to me. That is a big deal. He did take time out of his busy schedule. Kamala was asked to go. Yep. And she denied it. She
initially said she would.
Exactly. Initially,
and then turned it down. Yeah.
Which I think could end up biting her in the ass, honestly. I think that could hurt her. The one thing that kind of got to laugh at people, and I loved it, was he said on day one, Tim, he'd fire Gary Gensler, who's the chairman of the SEC.
Oh, I retweeted that when I saw it.
I love that. I don't think that's possible, but he can make changes to the SEC, and he would. And then he went a step further, too, and he said that he would immediately appoint a Bitcoin and crypto presidential advisory council. That I love. And right before that, in that same quote, he said, "If I'm elected, it will be the policy of the United States of America to keep 100% of the Bitcoins the U.S. government currently holds or acquires in the future." And I'm going to let you run with this next thing. So I agree with that. I think Bitcoin didn't rally big because there was a certain part of the community that thought he'd talk about a strategic reserve. Yep. Kind of like we do with oils, the Strategic Petroleum Reserve, the SPR. We have so much oil in case something happens. We have that oil to kind of help the country get through any rough times where if we don't have oil. People thought he might do that with Bitcoin. He didn't go that far, but he did say he would stop selling all the Bitcoin that the government has, which right now is billions and billions of dollars.
And then sure enough, and I sent you the tweet, Sure enough, I think within 48 hours, and I've got it here, and you might know the stat, but they basically liquidated around $2 billion. Yeah. So they liquidated Bitcoin that they had seized from Silk Road and, back to playing politics. I kind of would like your opinion. Was that purely just like spite because he went over so well at this Bitcoin conference?
I think so. And I also think it was a really, really badly timed move to do that. And I don't know whose decision that was. I mean, you have to go up to the top and you have to go to Biden and Harris at the end of the day. In my opinion, they have to sign off on this. So it had to go to the top. It was kind of like a big FU to Trump, number one. Two, I think they just don't believe in Bitcoin. And just the timing was just insanely ridiculous. But what's going to piss me off, and not picking sides in politics here,
right?
But if Kamala comes out in the next 2 days or 2 weeks or a month and a half, whatever it might be, and suddenly is a proponent of Bitcoin, she's absolutely full of shit. Yeah. Because, actions speak louder than words.
Right.
What this administration has done against the Bitcoin crypto crowd and backing Gensler in the nonsense that he has had against this entire movement.
He's fought it tooth and nail. Yeah.
And so to me, if I'd rather her not come out and say anything. Just say nothing. I mean, because I think we all know where somebody stands because actions speak louder than words. So, I think it was a big FU to Trump by doing that. And again, I think it hurts them. And I think Bitcoin is not going to...
To me, and everybody, I've been called Captain America, again, to me, it just hurts the country. Because why would you liquidate this asset that, in theory, you got, under good terms, whether the Silk Road thing, whatever, but you're getting rid of an asset simply to spite your opponent. How does that help the American people is my point,
It doesn't. And, you think about it, I mean, obviously the US dollar is still the prime, the number one currency in the world. It's not going anywhere. Yeah, for now. And probably, we talked about this a couple of weeks ago. In the near future, it's not going anywhere. And Bitcoin's not taking over. Bitcoin's not going to be a currency. Bitcoin's a store of value. It's more of a gold. But, so why not diversify? US dollar is, had a nice run as of late, last couple of years. But for the most part, the US dollar over the last 100 years has lost 99% of its value. Why wouldn't you want to have some damn Bitcoin?
Right.
Why wouldn't you want to diversify? That's what kind of blows my mind. I can't wrap my head around it.
So any other kind of takeaways before we move on to the next topic?
No.
Did you watch the whole thing? Or?
I watched bits and pieces of the other stuff. Okay. And, it was a lot of these, what they call Bitcoin maximalists that just, they're not really crypto. They're more Bitcoin people. So, of course, they're bullish. I've seen all these guys speak and women speak many times over the years in person on podcasts. So kind of the same story, Tim, to be honest with you. I do like the fact, though, that we really are gathering. Every day there's a little bit more and more people from the fringes coming in and believing in crypto. And that eventually will continue to grow. And as that does, that's going to be great for the long-term sustainability of this industry.
Yeah. I mean, I thought, 2013 would have been the mainstream, but it feels like we're finally there where it's all of the doubters and the haters and the losers are finally okay, this thing isn't going anywhere. It's not a scam. Yeah. It's not, aliens are going to take all my Bitcoins, it's so it's not, now I think it's 10 years late, but it is nice to see kind of it gaining legitimacy and being much more mainstream.
Real quick, I'm not going to, I hate to even make this comparison to crypto / Bitcoin and or artificial intelligence, but artificial intelligence has been around a long, long time, decades, and it finally just took off, 2 years ago. So there could be an inflection point at some point, I think in the next 24 months, where Bitcoin in particular, Ethereum, maybe some of the big ones, but crypto takes off and goes parabolic, absolutely parabolic. And that's where you get to maybe 200,000 per coin for Bitcoin from 67, 66, where it is now. And again, that's only 3x from here. So it's not like it's that big a move, but that move could happen, in my opinion, in the near future.
By the way, I know all of you listen to every single episode of the SteadyTrade Podcast 10 times. I've heard people listen. They say they listen to it at least 10 times. We dropped that Buy the Dip Bitcoin episode on July 10th, and we didn't completely nail the bottom, but man, we were really close. So I was pretty proud of that. About a few days later, started taking off, and I actually went back and I'm like, when did we publish that episode? It was July 10th. And I think the bottom was the next day and then straight up. So yeah, I mean, basically, for those of you that didn't listen to that episode, Matt and I are very bullish Bitcoin and we're big proponents of buying the dips, basically. Yeah. So
awesome. Great call.
So let's move on to earnings. You've got a bunch of data here, as always. I love it. So I'll kind of hand it back to you here. So
yeah. So, you listen to the media and you listen to just people and barbecues this time of year saying how crappy the economy is, how bad the market is, which always blows my mind when you're trading near an all-time high. But But if you look at earnings, and these are blended earnings, this means the companies that have reported so far for the second quarter, and those that haven't, they take the estimate. And the blended earnings growth rate for the second quarter, this is year over year, over second quarter last year, 9.8%. Let's just call it 10, just to round it up. And it's gotten better. Going into the quarter, the estimates were 8.9. So it's actually coming in better than expected. And only about little less than half of S&P has reported. So, and most beat, about 77% on the 5-year average beat, 78% so far this year. So you're probably going to end this quarter, Tim, with a gain of over 10% of earnings quarter to quarter. And a lot of people will say, well, that's just financial manipulation. They can make their earnings look good. Well, the revenue growth rate is on pace for 5% year over year. It'd be the 15th consecutive quarter of revenue growth for the S&P 500. That's pretty impressive, too. We went through a lot of ups and downs the last 15 quarters is 4 years.
Sure.
Think about that. These are some pretty solid numbers. So at the end of the day, I have a lot more numbers. We don't have to get into them. But at the end of the day, U.S. companies are doing well.
Yep. Like, I'm just blown away by the fact that, in my opinion, not a business-friendly, government right now. And you look at these numbers, I'm blown away. Like I would have expected much worse. So that just shows me that, it's very encouraging, because if the policies start changing and we get more and interest rate cuts, which, again, you've got the data on that. It looks like, we're at 100% for cuts soon. It's like, wow, that gets me excited about, America and the stock market.
Yeah, and if you look at for the whole calendar year, the estimates for 11% year over year earnings growth. And you have to keep in mind, the Fed hasn't cut rates yet. We're dealing with, not historically high, but you go way back to the 70s, 80s, much higher. But over the last 20 years or so, historically high interest rates, which hurts a lot of companies because it costs a lot more to borrow, which hurts the bottom line.
Right.
And you're still seeing earnings growth. And one other number that people don't look at much, and I don't look at it that much, but I always just glance at it, and that's net profit margin. So that's how much, they're pulling out of the profit, how much they're actually making, pull out of every dollar they're bringing in. Above 12% for this quarter. And this will be just the second time that's been above 12% in the last 2.5 years. So you're starting, like, all the numbers, Tim, like, I don't care how you slice this, pull apart the onion, they look pretty damn good. Mm-hmm. And that's the reason the market's doing well. And so if people ever argue with you at a dinner party or at a bar, at a barbecue, why the market's doing well, tell them, look at the numbers.
Right.
You can't spin these numbers. At the end of the day, you could spin profit, but when you have the margins and you have the revenue right up with it, nothing to argue with.
Yep. And that's why we've seen so many killer earnings winners. Yeah. Like, that's, that's part of the swing trade strategy that I use, is like, we put the pedal on the gas during earnings season because we love to see those earnings winners, and that, because that gets people excited. They see the stock react, and then, the idea behind swing trading is, you want to be there first and then sell to the euphoria type idea. So yeah, I mean, we're seeing that starting to emerge right now. Now, you made one nice point in the notes that I do want to touch on. Like, and when I talk earnings winners and earnings losers in short-term trading, that's a lot of times it's a very misunderstood term, because what we mean in like day trading and swing trading is the reaction to earnings. Because a lot of the times, especially in low price stocks, in the lower price, more speculative stocks, people will struggle with the connection because they'll be like, well, they had terrible earnings and the stock's up 100%. But in small caps, a lot of the times, like, if you lose $1 million and everyone was expecting you to lose 100 million, those stocks explode because they're like, holy crap, these guys are turning it around. So you made a point about, if your company misses earnings, look out. So I want you to kind of touch on that.
Yeah. So I couldn't find the exact number. I apologize, but usually FactSet puts out some nice numbers, and a couple other research firms, where it shows if a company misses earnings estimates, what the reaction is the next day. And this year, it's really getting hit harder. So it's basically saying if you miss earnings, most stocks have priced in perfection. So if you miss, it gets killed, like more than normal. And even the companies that are beating aren't going up as high as they would do on average. So the reactions have been more negative to earnings. And maybe that's because we've had a nice run since October. It might have been a lot of the buy the rumor, sell the news too. So that doesn't surprise me a bit. But again, maybe I'm Pollyanna taking the bullish view here, but you don't have bubbles when companies beat earnings and don't react that well. Yeah. Bubbles are when you miss earnings and stocks go up on some craziness. We're not in that bubble. That's the one thing I want to take from this number. Yeah. And also keep in mind, your swing trade, your day trade. Me, long term, if I'm holding for even 5 years, sometimes 10 years or more, 5 years, that's 20 earnings reports.
Right.
They're not all going to beat. There's going to be some really bad reaction. So you can't just freak out on one earnings, and you have to look into it. A lot of times companies miss, and they say, well, that's because something happened. We didn't book the revenue this quarter. We'll book a next quarter delay. So it's going to be bigger next quarter. Got to look big picture, right? So don't freak out just because you have one bad earnings.
Hey, I do want to take a quick aside because you were talking Bulls and Bears. I see you retweeted the other day. I actually met him a couple times. I like the guy, but the Andrew Left situation, I saw you retweeted that. So let me fill people in if you're curious. So Andrew Left, Citron Research, very prominent, bear. Okay. He hates everything. I don't know if he's ever met a stock he liked. Okay. And obviously right now it's the fog of war. We don't know what will happen, but what he has been accused of is basically taking short positions, bashing the stock publicly, and then basically immediately covering and then tell people like, oh no, I'm long-term short. So basically, and I'm very summarizing that, but that's like a lot of what I don't like about a lot of these short bias guys. And Matt commented on his Twitter, very similar, that they say they're long-term bearish, but they just take a position, bash the thing, say all hell's coming like Bill Ackman did on CNBC, and then they just immediately cover. And then a lot of these stocks end up squeezing huge because people don't realize that they covered their whole position and they just moved on to the next trade. So I wanted your kind of input on that before I forgot.
Yeah, I want to talk about that story too. I'm glad you brought that up. I'll give you my really quick view is the fact that I don't understand how that is ethical/legal when what I do is long-term investing. So if I recommend a small cap, and I've had this in the past where we've had huge lists at prior companies where we put out a small cap recommendation overnight and it opens up 40 to 50% the next day. Yeah. I could easily say in my disclosures, I own 1 million shares of this for $1 million worth of this. And the next day, sell it up 50% and make $500,000. That's what he's being accused of. And to me, that is not only illegal, but highly, highly unethical. I couldn't sleep at night. So I don't own the stocks. I don't own it if I did, I would always do disclosure because it's you're kind of front running. It's called front running. And back in the day, that was extremely illegal. Yep. I just don't understand how people who do the shorts always got away with this. That's what pissed me off with the SEC. The longs, they'd come after our industry all the time. But the shorts, they're activists. They're doing it.
Exactly.
And Tim, you got to listen to this. It's really funny. I think it was Thursday or Friday night. I was visiting my father outside of Philadelphia. I'm in his old kind of hotel, nice restaurant bar. My dad's at a concert. I went by myself. I have my iPad. I'm reading the Andrew Left article, catching up on it. This is around 4 or 5 o'clock, happy hour on Friday. Guy next to me starts talking about IPOs. And I said, I was like, oh, I overhear you and another couple. So we got into it. And he's like, are you Matt McCall? I'm like, yeah. He's like, oh, I'm not going to say his name. A very well-known short seller, the people I'm bashing right now. And I said, holy shit. And I go, well, what's your industry like? Because Andrew Left just got arrested today. And he's like, yeah. He goes, I'm going to be under a microscope. And, we ended up shaking hands at the end. But you could tell he didn't like me or I didn't like him. But like, what a weird situation. Reading the article and one of the competitors is sitting right next to me, some random dude. It was crazy. And everybody's looking at us like, are they going to fight? No, we're not going to fight. We're just having a good time.
Hey, man, there's two sides to every trade. Sides to every trade,
Yeah.
And like kind of the last point, and then we'll get back on topic. But like what I never liked about it is, listen, you think of like the average, listen, Matt, like I always like to say, I've been day trading penny stocks for 18 years, man. I got the 1,000-yard stare. I got PTSD. The things I've seen in penny stocks would curl your hair, okay? But like the average person, they got their hard-earned money. They can't necessarily follow this stuff every day. And what I never liked about it is just that capitalizing on fear. Like all of a sudden, you see this research report or this guy's on TV, and he's like, your stock's going to zero. And the standard person that's not, actively trading, that's seen this kind of stuff before, they just immediately panic. They sell because they're like, oh, this guy's on TV, man. I got to listen to this guy. And now they sell their position and, he profits from that fear. And that's what I didn't like because Hindenburg Research is another example. Mm-hmm. Like I really respect them because he's had an incredible win record and like he does the deep dive and stuff. But a lot of these guys just kind of they just bash it and then they cover, and then, hey, whatever happens, good luck. And I just don't like it because I think of, again, that average normal person that sees that and is like, oh man, I got to get out of this before it goes to zero. And you're just capitalize on that. It's like yelling, to me, it's like yelling fire in a theater. It's like, fire, and everybody runs out and there's no fire.
And the average person gets screwed. The people that we're talking to right now get screwed, and that's what pisses me off.
That's what
we're here to educate and help people, and they're doing the exact opposite of what you and I are trying to achieve on a daily basis. And one last thing for me, the guy did tell me, I was speaking to there, that the way a lot of this industry works is a hedge fund will be short a position, right? And they'll do a big research report on it, and they basically sell it to or give it to these people, and they publish it as their research. And the hedge fund then, of course, makes out because it's helping them push their stock they're already short lower, and then the hedge fund makes money. And they're accusing Andrew Left of that too, being in bed with some hedge funds as well. There's like 20 accounts, 19 or 20 accounts against them.
Was there that many? See, it was
one of those. He turned himself in yesterday, and I got to tell you, if he's convicted, he's effed. Yeah, he's screwed.
Okay.
And,
see, I have to admit, I saw the news right at the market open, so I just kind of scanned the headline, and then I was like, I'll talk to Matt about it. But
he's in trouble. He's in trouble. Allegedly, I should say. I always have to put, we have to say we're allegedly. But if that stuff becomes true, that's some big money and some jail time probably. But who the hell knows?
So next topic, we've got actually we're recording on Tuesday, so we've got the Fed meeting tomorrow. Again, we've talked about this many times. We don't think the cut is going to come until the election, but in my opinion, I don't want to speak for Matt. I think it's almost guaranteed right before the election. Hey, we're cutting rates, blah, 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 vote for us. So, actually, again, so it's at 100% in your notes of a September cut, the betting odds, basically.
The betting, if you look at FedWatch, basically, the FedWatch, and, they do the analysis, and they have it, I think, 99% or 98.5%, something of that extent, as for the September meeting. But then by the end of the year, there's over 98% chance 2 cuts by the end of the year, 60% chance 3 cuts by the end of the year. I think we have between 2 and 3 cuts by the end of the year. I think those numbers are right. But those changed. Those were like 100% beginning of the year, then it went down like 50%, now they're back up to 98. So this stuff can go all over the place, and we all know that. The one thing I wanted to, we're going to put a chart up of this, is Truflation. I don't know if everybody goes to that website. Just type in Truflation, TRUFLATION.
That's a new one for me.
It's great.
Always learning from Matt.
The Truflation is down to 1 year low of 1.54%. So I think inflation is not as big a concern as it has been for the Fed. And we've seen, obviously, we've seen the numbers recently. We've talked about them. So I think the Fed can start being aggressive, and we're seeing them move in small caps and biotech and housing. We've talked about this in the past. So before I go to watch list, I think we have one more topic we want to talk about here, right? A fun topic we could talk about. Okay. So I'm not going to say anything about Tim, but if anybody knows me, I like my Zins, which is backwards, whatever. It's just a it's a nicotine pouch. And everybody I talk to, every time I do it, it's like, oh, you're an ex-smoker. I'm like, no, I was never a smoker. I never smoked at all. I never
I'll smoke an occasional cigar, but twice a year type thing. Yeah. Yep.
I will too, and I'll feel like crap after I smoke it, so I don't do it very often. But I got hooked on these things, and it's big. I was listening to another podcast I like, which, I'm always talking about other people that, that I like to listen to. It's Odd Lots by Bloomberg. Joe Weisenthal, and I can't remember the girl's name. But they just had a guy who owns competitive Zyn on. I listened to it this morning on my walk, and talking about just how big this industry's come. And it's really saved Philip Morris International, which is symbol PM, breaking out to a multi-year high, not far from an all-time high, beating the S&P and NASDAQ this year, pays a 4.4% dividend. You think about a stock, if you're in a mindset, like, and Tim and I aren't, I don't think, but if you're in a mindset that big tech's going to fall apart, AI's BS, then you want to probably own something that owns this, because this isn't going anywhere. Own a Philip Morris for the long term.
To me, it's like you've heard the term the zeitgeist. It's just everywhere, especially like in the youth market. Like, I don't know if I know anyone that's like in their 20s that's not, on the Zyn. It's like, it's huge. And for me, obviously everything has its pros and cons, but to me, it's just, it's a great energy boost, and I think it helps with mental clarity, and I just like it. And listen, it's a lot better than, in my opinion, weed or alcohol or a lot of these other things that people do, and I'm not saying it's on that level, but I just like it. And like, to me, it's, it's the lesser of all evils. And I just see big time, like Matt does a lot of writing. I do a lot of writing. I just see better focus with it. Like as a day trader, and this isn't a commercial for Zen, we'll get to the point, but like as a day trader, and listen, I got ADD, man, and it really helps me focus when I read and when I write, and I just see better mental clarity with it. So
I like it. I mean, it's funny. It almost does the opposite for me. It just, maybe it's clarity, calms me down, gets me focused. And I unfortunately suffer from ADD as well, like clinically suffer from it. And I don't know if Tim's ever been clinically, but by knowing Tim, he does have it too. He has it. I'll back him up. I'll give you my medical opinion is yes, you have it too. So you can imagine two of us in a room together. We don't know what the hell's going on. We're each talking to the wall. So we're going back and forth. Yeah, this is I'm not telling anybody they should try this at all. That's the last thing that I'm saying, because it is highly addictive. But the point I want to bring it up, it's huge. And a lot of people are talking about it. Tucker Carlson kind of made it big. Joe Rogan's talked about it. Even Huberman, the big longevity guy, says he takes one a day a lot of times to focus. Like this is not just some fly-by-night thing. And, there's no cancer warning on it. Doesn't mean it doesn't cost, but there's no cancer warning on it because it's just nicotine ground down with things that kind of dissolve. If you want to listen to Bloomberg podcast, I'd listen to it. It's about 35 minutes on Zen. It's pretty fascinating.
And one of the reasons we brought it up is, I saw an article a couple weeks ago. They can't meet demand. Like if you're using it, it's a lot of times like you struggle to find it. Like, I'm in a small town, but my local party store, I mean, they're out all the time. Yeah. So they're actually, they're investing $600 million in a new facility in Colorado just to make Zen. That's it. So
pretty amazing. We'll put up the chart of Philip Morris here too. PM. I mean, this thing's gone bananas. It was at $88 in April. Now it's 114. As like I said, it just broke above a bit of a high from 2022, early 2022. Broke above that. Next high is 2017. Not too far away. Maybe about 10-12% from that. So this is a really good looking company, and I'm not recommending to buy right here. It's run a lot, but I think if you're looking to diversify outside of tech, get a 4.4% dividend. That's not bad because interest rates aren't going to stay as high forever. Eventually, 4.4 is going to look even better than it does today.
Right. Yeah. So this was kind of your idea. So, we're always kind of trying to not only give, have some fun, but give commentary, but we had some ideas. So, Matt's got a watch list, and then I also did, a small cap watch list that's specifically based on, very speculative stocks, but the kind of the top 3 stocks that I think could have long-term legs. And again, I put it in that research. Now, by the way, APLD was one I've traded in the past, and we talked about back, I think that was episode 1. We talked about APLD. But yeah, we got a full list. So you want to start, and then I'll kind of go over mine.
Do you think, maybe you do APLD, I'll do one today, and maybe next week we'll dive deeper, because I want to give these justice, right? Like I don't want to go through 6 and just, I think part of this is educating people and giving ideas, but why don't you go with APLD, then I'll throw one at it, and then we'll save those for the next show. We'll do a watch list. And you know what we should do, Tim, is anybody wants questions, put them down there. We could do a show next week, basically customer focus, listener focus, where we talk about ideas. We share ideas with you. At the same time, take your questions.
Yeah, perfect. I love it. Yeah. So APLD, just basically, this is kind of verbatim from their site and stuff. Applied Digital Corporation is at the forefront of revolutionizing cooling technologies, focused on liquid cooling solutions to offer significant operational facilities. And again, that was episode 1. Yeah, you could check out episode 1. And I was actually invited back to the NYSE 2 weeks ago to get interviewed. And they asked me, they're like, hey, what do you think is kind of like, they wanted a story around AI that like people weren't talking about. And I'm like, cool. I think that's the biggest thing is with the scalability growing, I told that story on the first podcast. I was at my tech business. We would go months with capacity issues because we couldn't get the cooling. Like it was always it was a trouble for us literally for a decade. Like we put in new equipment, stuff would overheat, we'd pull it back out. Like it was always this battle. And these data centers are facing the same type of thing. And APLD issued a press release I think it was a few months ago, that they're going hard into cooling. I like that from the story perspective. Big fake, their selling point is big efficiency, blah, 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 blah. And what I like about this, from a low priced speculative stock, is that this stock has a history of running. Back this early summer or kind of late spring into summer, I'm from $2 to 8+ and just a beautiful uptrend. Now it's pulled back down into the 4s now, but it's kind of basing right where it based in the spring. So I think if this thing can continue to base in the low 4s, get some more news, maybe the cooling story gets out there, then I think that this could bounce off of that 4 level and retest that high. So I do really like this one as a small cap. Now I always have to give disclaimers on small caps. If this thing breaks down below 4, okay, because these stocks move fast, that's why we love them. But if it breaks support at 4, stay away from it. But if it can stay above 4, then I think there's a good chance that this could retest the highs again from back in July at 8+, which, that's basically 100% move from there. So,
yeah, it touches everything that I like for a small cap speculative play. It's in the mega trend you want. I look at the financials and they're quite interesting. Last year at 55.4 million in revenue, year before only 8.5, huge growth. This year we're estimating 160. By 2026, middle of 2026, or fiscal year's middle of the year, 506 million. And that's big. Considering that the market cap's 491. So we're looking at a 2-year forward price of sales of hits it of less than 1. That's insane for a growth company. Now, the big thing when you see that, Tim, that I always do, because I get excited, how much money are they losing? Are they going to make money? And what I find, again, really, really fascinating with this is that they're expected to turn their first annual profit in about a year and a half. That's impressive. Like if they can reach
especially
that.
for a very infrastructure heavy type business, like they got to spend a lot of money. Yeah.
But you know how they're doing it. You look at, their EBITDA margin. This year expected to be positive for the first time around 10.7%. By 2026, fiscal year 2026, up to 43% EBITDA margin. So their margins are exploding. And if you're a long-term investor, you need to see margins go up. And that's where you're getting the profitability from. So again, speculative play, 8 out of 10 on risk level for me, but it checks all the boxes. This is one where if I were to buy this as I'd buy a long-term, person. You'd swing trade it. I'd say, you know what? I'm going to put X amount into it. I'll give it 3 years. Doesn't work out in 3 years. Whatever I got left, I'll take out, but I'll give it 3 years because this could be a triple or quadruple if it hits its numbers in 3 years, in my opinion.
Yeah, and like I said, what I like about it is, this is more of a day trader type idea. We loved it. We call them former runners, and like these stocks that have history of big moves tend to make big moves again because everyone, once they start seeing them on their scans, everyone sees them trading crazy volume. The herd piles in, which creates these repeated moves. Like a lot of these small caps, like if you've heard me talk about former runners, we look at that chart and a lot of these almost like every season, like spring they'll rip, summer they'll rip, fall they'll rip. And we love to see that. And what I like about APLD is everything that Matt just said. It's not like some biotech that's just bleeding cash all over the place. Yeah.
No, there is a story here, and it's a real company. That's what I say. It's a real company. Yes, it's not generating a lot of revenue now, but it is growing. And again, it's like anything else in life. Nothing's guaranteed. But the thing is, if you want to get a 3 or 4x in 3 years, you got to take some risk. I don't care what anybody says. NVIDIAs don't come along every day. Let's be real. You got to take risk. And, you could look back and say, how many times have you looked back and like, you probably say this a lot. Shit, I used to day trade that stock 5 years ago. Now it's up 10x, right? Yeah. You probably say like, God, could just bought it and made 10x.
One of my favorites was VKTX. Yeah. Like it was like the darling of day trading, and we were in and out at like 5 and out at 550 and in at 6 and out at 650. and then it kind of just faded out of the day trading world. And then all of a sudden someone's like, oh, do you see VKTX is at 100? I'm like, oh.
So the point is like, but highly risky to do it back then. Hindsight's 2020. But when it comes to stocks like this, there is upside, and it happens every day. You're having stocks that hit their targets like that. So it is doable. I want people to know it is doable. I'm not saying it's 80% chance going to happen, but it is doable. It will happen. And that's why you diversify. You don't buy just one. You can't just buy one of these, and you're just buying a lottery ticket at that point.
Sure.
But do you want me to move on to mine? We'll throw mine out there.
Yeah, might as well.
Okay. Yeah, throw mine before we wrap up here. So I had 3. I just I'm going to go with one that I honestly don't know how to pronounce the damn name. And The symbol is DCO, Ducommon, DUCOMMUN, Ducommon. Like I don't know how the hell they pronounce that, but that's how we're gonna call it Ducommon. This is a company. It's a little less than $1 billion. So I made sure I found small caps, Tim. So they kind of all stayed in line here. This company is probably one people never heard of.
Well, when I saw it, like it again, like I got crazy ticker memory. I'm like, never seen this one.
What's crazy, this company has been around 175 years. It's the oldest continuously operated company in the state of California. Nuts, isn't it? And it's still less than $1 billion. Yeah. The oldest continuously operating company in California. I know. I didn't know much about it until about a year or two ago when I came across a scan. But so I found it back in 1849. They kind of have two areas, electronic systems and structural systems. And for me, this is all about the electronics because we're having electrification of everything in the world right now. So they really play into that. But where they really hit their niche, Tim, is they sell a lot of their stuff to the military and space. Right now, they supply products for military aircraft, Joint Strike Fighters, the Apaches, F-A-18s, CH-53Ks, also missiles, Patriot Tomahawk, SM-36s, and defense, where majority of their revenue comes from right now. And they have a backlog. Again, this is a company with less than $1 billion market cap. They have a backlog of $570 million. So that's a really nice backlog that you see there. And they're making big money. Earnings per share last year, $2.57 a share. 2 years from now, $4.75 estimate. Margins are expected to go to 13.4% to 16.2%. That doesn't sound like a lot, but when it comes to really labor-intensive areas like this, margins aren't going to be big. But you can still see the bottom line is huge. Forward P of 16.8, forward price of sales of 1.1. So it's not expensive on any metric out there. Any of its competitors, even the market, is much cheaper than it. Then you look at the chart, and maybe that's the one thing that actually kind of bothers me because it's so damn good.
Exactly.
Is at 43, now it's at 60.
I was just looking at it, and basically for a year, it's just, I mean, obviously it went sideways a little bit, but for a year, it just keeps breaking out. Yeah.
And the one thing that I see is I go back to the all-time high from April of 21, 65.40. The recent high that we hit on this was 64.49, so within $1. So you're right at a double top. If we're talking just pure technicals, we're at a double top. I think we probably try to get through, maybe fail this time. But if we break above that, then you just get this whole another wave of buying, and it's over $1 billion at that point. You get some big money coming in. So this is one, again, diversifying away from the AI and everything else out there. It plays electrification, but it also plays a pickup in commercial travel, especially military and space. Two areas we're going to see a ton of spending because we're in a very crappy world right now.
Well, it's funny, we're going to save the other ideas for the next episode. One of my second small cap idea is a space play as well. So yeah, but we'll save it for the next episode. So
we got to leave a teaser there, right? That thing they call it a teaser, don't they?
Well, everyone, thank you. A little bit longer episode today, but we had a lot to go over. So as always, I know I remind you guys every week, but I think we're 10 or 11 episodes in. We're always looking for input. Give us those comments. We get a lot of good comments, but hey, even if they're negative, we would like to really grow this podcast into something awesome. And I think the best way to do that is with comments, whether they be constructive criticism or whatever. That's what we want to do. We want to turn this into something really cool and something you guys look for every week. So give us those comments. And as always, thank you, Matt. And we will see you on the next episode of the Steady Trade Podcast.